All right, everyone. All right, we are live. We're ready to go. Today is what, March 17th. It's 4 o'clock my time, probably 6 or 7 o'clock your time. So thank you again for coming on live with me to do a Tuesdays with Peter. So I appreciate you very much. And today we have another exciting 57 minutes, right? Very exciting. I have an amazing guest who raised millions of dollars as a beginner, private money, started from virtually nothing, and now he's owned 17, $18 million in commercial real estate in just 3 years. So he's going to share his entire story with you, and he's going to share what the three keys of his success were, and you can glean from it and learn from it and apply it. All right. So we're going to get started. All right. So here, I just want to get started here. I'm going to just put in the chat here where you're calling from. I'd like to see where you're calling from. All right. So I have Dan from Calgary. All right. I have Hassan. All right. Brent from New York. I have Juanita. I have someone, Jimmy from Florida. All right. Stanley. Hello, Stanley. Eli. Hello. All right. Marisol. Good afternoon. Henry. All right. Todd, Jason, Monique, Jose from Waco. All right. I have someone from Massachusetts, Atlanta, Georgia, Tennessee Mountains. All right. One of my favorite places. I have Masunda from Massachusetts, Adabola from Georgia. Hello. All right. Saritha from Nevada. Byron from Huntsville. All right. So welcome everyone. All right. We're going to jump right into it. One thing I want to share before I get started is I had this conversation with my wife, and it was the question was, "Dear, what do you love about real estate?" Right? And the other side, what do you hate about real estate? Right? In our business. So for her, the answer is pretty obvious. She likes real estate. What it affords her is to go to the Napa Valley vineyards anytime she wants, right? So that's what she loves about it. For me, of course, me being an engineer, mine was more technical, right? So I'm going to share with you my top three things that I love about real estate, and then the top three things I hate about it. All right. So number one, the first thing that I love about it is the forced appreciation, right? I probably wouldn't be here tonight if I couldn't force to appreciate my properties over the years and free myself up to be here talking to you, right? And get it to the point of mentoring people across the country. So if it wasn't for forced appreciation, I probably wouldn't be here. So that's probably the first thing I like. The second thing is the cash flow, right? To me, and to those of you out there, cash flow to me means peace of mind. That's what it means, right? Gives you peace of mind that things are going to get paid for. You have money in the bank, you have an income stream, and it gives you peace of mind. Okay. To me, cash flow is number two. Number three is tax advantages, right? The US tax code is written, right, to reward people to purchase housing, right? So why wouldn't you want to be a part of that? Why wouldn't you want to do that, right? To buy real estate, and then the IRS will reward you in many different ways to provide housing and provide jobs, right? So why wouldn't you want to be a part of that, right? The world's wealthiest people and the people that are doing great financially partake in what the IRS, U.S. tax code provides them. Okay. I know I mentioned three things I love. I'm going to give you five things. Okay. The fourth one is creative financing. I love creative financing. When you get a motivated buyer, that's you, right? And the motivated seller, one that we found, they come together, we can create beautiful things. And we have for our students, right? So that's one thing I love. And we have a slogan in our country, and that is, I mean, in our company and that is the best deals are not just found, right? They are created, right? So I love being creative with our students, right? Bring me your problems. Let's see if we can create something beautiful out of it, right? And these are problems they have no clue what to do. And I love that challenge, right? Okay. And then the fifth one is the impact that real estate has on people's lives. I love that because one deal can literally change your life. And I've seen it time and time again with our students, right? And also too, as a coach, I love seeing the underdog win, right? That's what I love to do. I love to see a person, soccer mom, single mom, right? Husband left her, and then she wants to get into real estate so bad, right? And she ends up buying real estate and becoming successful. We have that story, all right? So I'm going to get her on Tuesday night with Peter with me, and she's going to share her story. I love stories like that. So maybe you can be the next underdog to win, right? And the other thing, the impact on people's lives, this is me included, where real estate has afforded is it removes worry, right? Financial worry, right? It gives you options to maybe not work as many hours, options to try a different career, just different options. And then also real estate gives you what I love about it is the impact on people's lives. It positions you to help others. So if you have a charity or a ministry or someone that you want to help, when you become successful in real estate, it allows you to help others. And to me, that's what life is about, right? Right? It's not so much about me, it's about others, right? When I help others, I'm taken care of. Okay? All right, now I'm going to switch it over to the three things I hate about real estate. Number one is those that work with me, you probably knows number one is I hate bad property managers, right? What they do to properties and what they do to people. So I hate it. So we spend a lot of money, time, and resources in our company to make sure our students hire the best property management companies. I'll share a stat with you. And that stat is 80%, okay? 8 out of 10 of our students, sometimes 9 out of 10, just depends on where you are, change property managers within the first year, right? So once our student closes the deal, we work with them. If we sniff that the property manager is bad, we fire them. Okay. And we know what a good property manager looks like. In fact, a member on our team has managed over 3,500 units. So she knows her stuff. You met her in a previous episode, Coach Julia, right? Amazing person, knows her stuff like the back of her hand. She can smell a bad property manager from a mile away. And we have no time for those people. Okay. So that's number one I hate. The other thing I hate about real estate, when people think about get rich quick thinking, right? I just don't like it, right? Because commercial real estate is the long game. You do get rich, but it takes you a couple of years. Okay. So it's not going to happen overnight. It never does. Okay. You may get lucky. If you have been attending our Tuesday night calls and you've seen our case studies for the students, it takes them about 3 years to make a significant impact. Okay. Not a long time, but it's also not a short time. Okay. So real estate is a long game. And we have a slogan in our company and that is the best time to have bought commercial real estate was 5 years ago. The second best time is now, today. All right. Okay. So I have a third one that I want to share with you that I hate, and that is analysis paralysis, right? And the reason why I hate that is because analysis paralysis steals futures. It does, right? Let me share with you. I had a friend of mine, I won't use his real name. All right, I'll call him Alan, right? Smart guy, worked at Stanford, older guy, had grandkids, and he wanted to invest with his grandkids long term and really bless them, leave a legacy. Well, in 2019, he told me, Peter, the market's about to crash, and I am not investing. I'm going to wait for the market to crash. He had all this money saved up for years for his grandkids and his family, and then he pulled out of the market and decided not to do anything, right? So he did nothing. He kind of just disappeared. Well, 2020, you know what happened? The COVID happened, and real estate stopped 1 month in April 2020. After that, it was glorious days. We've had a great time during COVID for real estate investors, made a lot of money. If you bought your property in 2019, it probably has doubled in value by now or close to it if you bought the right one. So he really missed out, right? Ellen missed out. So, when you commercial real estate always have risk, right? And it's a slow churning wheel. But if you buy the right property and give it time, right? And you get over the analysis paralysis, you're going to win, okay, with the right team, especially with the right coaches behind you. All right, okay. Everyone receive that little word from me today? Everyone understand what I just said? Give me some uh, communication in chat here. Let's see here. All right. Okay, good. All right. Okay, good. Thank you so much. All right. So what I'm going to do now is I'm going to jump into this quick training. And what I wanted to share with you tonight is all about raising private capital. Okay. One of the most popular topics that we could have. And I'm going to share that with you. Okay. So let me bring up mine. Okay. Give me 1 second here. Looks like I have a malfunctioning mouse here. All of a sudden it stopped working. Give me a second here, see if this will work here. Sorry. Oh, wow. Okay. Oh, wow. Okay. Give me a second here. Sorry. This just happened all of a sudden. Stuff happens here. Okay. Let's see if I can get this working. Oh, I can. Okay, great. All right. I'm going to share this right there and share that. And okay. And I'm going to share this right here. Give me 1 second. And there we go. 1 second. Come on. Right. Okay. Give me 1 second here, guys. All right. And okay. Sorry about that. Okay. All right. There we go. Okay. Took a while. All right. So, episode 14, as a reminder, tonight you're going to meet Jaden, and he is proof that the three keys work, right? And the three keys I'm going to share with you tonight. So Jaden started up as a total beginner. He raised millions of dollars in private money. He purchased over 199 units, and current valuation is 18.8. I stand corrected. Today he told me it was 17.8. So we're off by $1 million. But anyway, it's a great number. All right. So tonight, what I want to do is start with this: how to raise private money without owning a single property. Yes, it is possible, and this is what Jaden did. Okay. All right. So first of all, I'm going to start off with a quick chat here. All right. And here's the chat. What's what should you do first? Right? Should you, if you have a great deal, should you get the money first, or should you get the deal first? Which one? What do you prefer? Getting the money or getting the deal? All right. All right. Tell me that. All right. So I have A, B. All right. The deal. Okay. It's split right in the middle. Split right in the middle, it seems. Okay. All right. Here's the answer. The answer is both, right? So you want to do both at the same time. You want to work on establishing relationships and building trust with investors while looking for the deal. Okay. One does not come before the other. So A and B are both the right answers. Okay. So work on both. All right. Okay. And speaking of money, what I want to do here is I want to share a poll here. So let me share this poll. And all right. Okay. I'm going to launch this poll. All right. Here's the poll. Right. Does everyone see that? What is your biggest obstacle to raising private money? All right. And is it, uh, I don't know anyone with money? I'm afraid to ask people. I don't know what to say. I don't have a deal yet, or all the above. Which one is it? All right. So it looks like, uh, oh, let's see. I don't know anyone with money is leading the pack. Oh, someone's saying all the above. All the above is leading the pack. Okay. All right. Okay. Very good. Very good. Thank you for that. All right. So tonight we are going to solve this issue, right? And I'm going to run a second poll. I really want to find out. Okay. And here's the poll here, right? What do you think investors care most about? High returns, protecting their money, who is running the deal, or the property itself? Answer the question there. All right, let's see what your answers are. All right, protecting their money is number one so far. Keep putting in your answers here, right? Yes, so protecting your money. Number two is high returns. Who is running the deal is last. The property, nope. The property itself is gaining steam. Okay, I think the clear winner here is protecting their money. All right. Okay. So thanks for participating in that. All right. So here's what I'm going to do next here, and that is ask the question: do I need to own property first to raise private money? And the answer is no. Okay. It is absolutely no. You will learn from Jaden that the answer is indeed no. Okay. Most beginners believe they need to have a track record before anyone will invest with them. We have students all the time that come into our program. Peter, I don't even own a home. Can I raise private money? And the answer is yes. We will show you how to position yourself to be in a position to raise private money. Okay. All right. So today's 3 keys will show you exactly how to raise private money starting from zero. All right. Here are the 3 keys. Key number 1 is the deal worth raising money for? So the deal has to be good enough, number 1. Okay. Number 2 is you. Okay. You have to build trust with investors. Okay. That takes time. And key number 3 is the investor themselves, right? Does the deal match what they want? If the investor goals this, but your deal does this, that's not a match. Okay. These two need to match. Okay. All right. Okay. Here's key number 1. Okay. Follow me here. Key number 1 is the deal worth raising money for. I call this the 2-plate test. Okay. The deal must generate enough return. Okay. That's return on investment to fill 2 plates. One for your investor and one for you. So if your total deal's cash on cash return is 14% and you're going to pay your investor 8%, what's left over for you is 6%, right? And because this deal produces 14%, it has enough to pay the investor and pay you. If the deal can't fill both plates, it's not good enough. Do you understand that? Okay, put that into the chat. I'm going to make sure you get this part first. All right, put that in the chat. Okay, great. Here's a quick example for one of you that says no. All right, here's a 12-unit deal example. All right, so let's say you have a 12-unit apartment building. The down payment is 200%. The net cash flow is $28,000. Okay, so we're going to figure out what the cash on cash return is. The cash on cash return formula is your annual cash flow divided by your down payment. Here's the math. So it's 14%. Okay. So again, if your deal produces 14%, you can pay your investor 8 and you get 6. All right. So if your deal only produces, 8% and you pay the investor 8%, you have nothing left over for you. So it has to be good enough to pay an investor. Okay. All right. Key number 2. All right. Here's key number 2. It's about you. Okay. So listen to this very carefully. Stop thinking you're asking for a favor. You are offering a valuable opportunity that pays better than any savings account secured by real estate. Okay, here's what I mean by that. Okay, here's another chat for you. Okay, choose the right mindset. Option A or option B. Here's option A. Okay, let's say you have a great deal, and you say, I need to ask my dad for money. This is so uncomfortable. I feel like begging. So is that the right mindset? Or option B, I'm offering my dad an opportunity to earn 15 to 20% returns that he can't get anywhere else. Okay, which one is more empowering? Okay, put it in the chat. All right, great. Yeah, I was hoping no one said A. You're all B. Great, thank you. Okay, so now do you see the mindset? Okay, now I'm going to give you the actual words to use. Okay, these are empowering words. This is what you say to investor. I'll give you 2 quick scripts. Okay, so you can see how it works. All right, so how to offer the opportunity. Okay, let's say you have a 12-unit deal It's priced under market. You got rent upside, great location. Here's what you're going to say, right? You're going to say, I'm so excited about this. I just found a 12-unit building in a great neighborhood that's priced way under market. My team and I are buying it to force the appreciation by raising under market rents. We have room for one more passive partner to earn an 8% return. Are you open to looking at the numbers? That's it, folks. So is this intimidating? No, it's not. What I want you to do, for those of you that are interested in raising capital, I need you to screenshot the screen, take a shot of the screen, take a photo of script A and a photo of script B. Okay, they're mainly the same thing, but they're different. All right, so take a screenshot of that. All right, okay. So this is kind of easy to say. This gives you confidence that you're not begging. You're offering an opportunity for them to make money. Okay. All right. Okay. So now I want to go to key number three. Key number three is it's all about investor. Okay. So not every investor wants the same thing. As I mentioned before, you need to match the deal to your investor's goals. Here are the four investor goals. These are the four most common ones. Okay. Number one is cash flow. Number two is equity growth. Okay. Long-term appreciation. Number three are tax benefits to reduce their taxable income. And number four is legacy, right? They want to leave a legacy for the family, leave the family an inheritance. Okay. So what you're going to ask the investor is this magic question below. Ask them this: what matters most to you, Mr. Investor, Mrs. Investor? Income now, growth later, or tax savings? Simple question to ask. Okay. And once you get the answer, I want you to match their answer with the deal. Okay. I'm going to give you a short exercise on how to do that. Okay. So again, every investor wants this: cash flow, equity growth, tax benefits, and leaving a legacy. Okay. All right. Now, so let me ask you a question here. Drop in the chat. Would you like to meet someone who's achieved all four, over 208 units in about 3 years? You want to meet that person. Okay. This person was able to get cash flow, equity growth for him as investors, tax benefits, and he is absolutely and definitely leaving a legacy for his family. All right. Who wants to meet this person? Absolutely. Yes. Thank you, David. Thank you, Kimberly. Thank you, Lana. Thank you, John. Thank you, Vicky. Vicky says me. All right. And someone's saying, I want to be that person. Okay. We will give you an opportunity in a few minutes. All right. And okay, great. Great. Thank you for those answers there. All right. Okay. So now I'm going to go to my favorite game. What this is going to do, as I mentioned in this slide here, we need to match the deal to the investor goal, right? So not every deal will match an investor. Okay. So we're going to play the go, no go game. All right. Who's up for that while I bring it up here? Who's up for the go, no go? All right. Okay. So let's do that here. Okay. Here is scenario number one. Okay. The matchmaker edition. Okay. Here's the deal: 24-unit apartment building. You need to raise $250,000. Your plan is to raise the rents, stabilize the property, okay, and sell in 3 years. So a short-term deal, okay? But the investor, the one guy that you approach, his goal is to build a family legacy and retirement in 15 years. So he's playing the long game. Is this a match? So does this deal match this investor's goals? Okay, put it in the chat. Put it in the chat. All right. I see. Nope. I see. All right. Thomas, thank you. Broderick, Jerry, right? Novia, Clarence. Okay. Wait, somebody said yes. Okay. All right. All right. All right. Okay. No, a bunch of no's. Okay. Thank you, Emmanuel. All right. Here's the answer here. The answer is it's a no-go. Okay. This deal is a 3-year deal. Okay. The investor wants a 15-year long-term legacy hold. He probably doesn't need the money right now. He probably wants to have the money work long-term. As I mentioned before, he has 15 years until he retires. Okay. So the timelines here do not match. Okay. All right. Here's another one here. Okay. This is go, no go. All right. So here's a deal: 10-unit apartment building. You're going to raise $150,000, and the plan is to buy and hold, You're gonna get a 20-year loan. So this is a long-term hold. Okay. You're gonna perform a cost segregation study to pass the massive tax savings to the investor. Okay. And here's the investor. All right. Her goal is first of all, she's a high income earner and she needs tax write-offs. Okay. And she wants to build a passive income stream. Right. Is this a match? Okay. Yes. Is this a go or no go? Put your answers in the chat. Okay. Frank, Dwayne, Jerry, Brent, Masunda, Stacy. All right. I'm getting a lot of yeses. I have one no. I have a Melvin, Carmelita, Robert. Okay. It's all a yes. Here is the answer. The answer is a go. Okay. So this deal offers long-term cash flow, right? And major tax write-offs via cost segregation. Okay. If you are wondering what cost segregation is and the huge tax benefits there are, Stephanie is going to add the cost segregation YouTube video that I produced right in the chat. So you can click on it and watch it. Okay. All right. And then the investor needs tax write-offs and passive income. So this is a perfect match. Okay. So if you're interested in cost segregation, you're going to see that video link pop up in the chat very soon, and you can watch and see what cost segregation is. Okay. All right. Oh, someone's asking to show this deal. So here's the deal again. Okay. Make sure you get this here. All right. So 10-unit apartment building, you're going to raise 150. You're going to buy and hold it. You're going to get a 20-year loan. Okay. And you're going to perform a cost segregation study to pass the massive tax savings to the investor. The investor is a high income earner and she needs tax write-offs and she wants to build a passive income stream. So this deal is a match for her. This is why it's a go. All right. Okay. Everyone understand that? Yes? Put in the chat if you understand this. Right? Okay, great. Thank you, David. Thank you, Jimmy. Thank you, Cara. Okay, thank you, Timmy. Thank you, Brett. All right. Okay. So in summary, here are the three keys. And very shortly, I'm going to bring on Jaden, and Jaden will share with you the three keys, exactly what he did. So number one, is the deal good enough? Does the deal produce enough cash on cash return, enough cash flow to both pay you and the investor? Okay. Most deals, ladies and gentlemen, don't. So you have to find that deal. And I can tell you, you are most likely going to find that deal off market. Okay. Which we are probably the best at. Okay. Number two is you need to build trust with the investors. Okay. You need to build trust. That takes time. Okay. We spend a lot of time with our students on showing them how to build trust. And it's basically how just be yourself and do, 1, 2, 3 to build trust with the investors. Okay. We do the same thing with our sellers. Okay. And number three is step three is the investor, right? So does my deal match the investor's goals? Okay. You need all three. If one of them is missing, you're not going to raise money. So you need all three. Okay. And we have extensive training, like a lifetime of training in our system on how to do all three for our students. All right. Okay. So with that said, who is up for raising capital tonight? Put it in the chat. Who's up for raising capital? Who's excited? All right. Okay. Good. Good. Thank you, Normal. Thank you, Vicky. Thank you, Jimmy. All right. Thank you, Johnny. All right. Luis, Robin, Musunda, thank you so much. All right. Someone says, show me the money. Yes. Right now, I'm going to show you the money right here. Here is the money man. His name is Jaden, right? And before I bring him on, would you know that Jaden has 9 kids? He has 9 grandkids. So you better believe he better buy some real estate, right? To afford all the big Christmas presents and all the college funds he has to put away. And he's a wonderful human being. He's a man of God. He's an awesome husband to his wife, and he's an incredible father, right? I say all this because real estate's secondary to this guy, but his real estate, the way he's investing is so phenomenal. He's been one of our best students. So I'm going to bring on Jaden right now. So let's bring in Jaden.
Hello.
All right. How you doing, Jaden?
I'm doing great. How are you?
All right. Okay. Good. Good. Thank you, Normal. Thank you, Vicky. Thank you, Jimmy. Thank you, Cara. Okay. Thank you, Jaden.
I'm doing well, Peter. Thanks for having
All
me on
right.
tonight.
Thank you so much for being on our show here. And we just appreciate it. And Jaden, what we're going to do is I'm going to start off by showing pictures of the properties. So we kind of walk them through your deals. Okay. All
Great.
right. All right. Who wants to see Jaden's properties? Put it in the chat. Who wants to see Jaden's properties? Right. Okay. Got it. All right. So Jaden, let's show them what it looks like here. Let me bring it up. Okay, so this is the screen here, or this screen here. One second. All right. Okay. All right. There we go. Okay, Jaden, this is your 48 unit property, right? Great looking property. The purchase price was 3.6 million. You had 11 investors and you raised 595,000. And Jaden, you only put in $75,000 of personal funds?
That's correct.
Wow, that's amazing. And then you refied this property this year, and you pulled out enough money to pay back 77% of the investor money. Is that right?
That is right. And that particular aspect was an enhancement to the numbers that brought our investors to the table initially. So we
What
had
do you
a
mean by
unique
that?
opportunity.
So explain that to our beginner audience.
Well, just as Peter was outlining, we went through a process of helping people that were close to me, my family and friends, learn that commercial real estate might be worth looking at in general. And that was before this deal was around. When I had this deal, I was then able to give each potential investor a sense of what this particular deal might be able to do in terms of its cash on cash return over time. And
Mm,
I, of course, used the training and the different tools and whatnot that Peter, you and your team have provided to be able to even put that story together to understand what this property could do for us. And with that kind of a view, then I could have an intelligent conversation and folks, were looking at the deal before purchase with the understanding that we intended to hold it for a period of time. This one was a 5-year deal and had a certain return attached to it. What this refi did is it accelerated some of that return. So it
yeah,
put more money back in their hands quicker.
got it, got it. And Jaden, this was your first property, right? Your first large multifamily property where you raised money from. And most beginners, start with a 4 unit or an 8 unit, right? And you jump straight into this 48 unit. So what made you decide to go big instead?
I think probably like most of your students, my first understanding of what might be possible was not in the neighborhood of 48 units. I was thinking more, perhaps around that 8 unit mark. And I was looking at things that were 6 to 12 units primarily, maybe up to
Mm,
20 or so units in a couple of instances. And through the training that you helped me through, I was able to find some deals that were off market and looked at several. I actually was in contract on a few that were in that, 8 to 10 or 6 to 10 really. So, one was six units that I was looking at and did some due diligence and found out that it wasn't exactly what it appeared on paper. So a couple of those early on, I was looking that way and stepped in and out of a couple. But along the way, I was in just as your discussion prior to me coming on here had indicated that I had been building some awareness with family and friends
yep.
about what I was doing, and my intention all along was to um, not only generate wealth for me and my household, but also go beyond that to some family and friends and it's one of the things that excited me about commercial real estate in general was the potential to, help other folks along and achieve some of their long-term goals. And so
Yeah.
I was educating people early that this is something I was stepping into and giving them just a mini education, not not at the level that you're providing your students, but just the gist of what this is and how it produces wealth and
Yep.
warming up the engines a little bit, so
Yeah.
that when a deal came along, folks would already have, the general understanding, and we could talk about the particulars of the deal. So that's how I
Yeah.
kind of paved my way to something bigger than the smaller deal
Yeah.
size was. In that process, I came across a few folks that I would have otherwise had no awareness, but a few folks that had sort of touched into real estate a little bit here or there, folks that had some emerging interest in the area. And when I ran into that, it started to sort of open my perspective a little bigger as far as what
Mm.
might be possible, as a
Yep.
first step. And
Yep.
so I just used that. But even then, I wasn't at a 48 unit. I was probably in a 20 to 30 unit range initially. And at one point, further on down the line, I was visiting family and I was sitting across the table from my brother. I mentioned to him what I was doing. And he said, "Hey, I haven't talked to you about this, but I've done a little bit in this area, and I would love to talk more and get more involved." And so that became a conversation where we ended up deciding that we would partner together more closely. And once we
Yep.
entered into that turf, I thought, okay, my sights are now ratcheting up even higher. And
Yeah.
so then I started looking in um, the smallest thing I would look at was 35 units. And I
Yep.
was looking 35 to 100 sort of as my scope opened up with that partnership and some of the experience and network that he might bring to the table with it. So
That's great. That's great. Jaden, some of the questions here. So, what state is this property located in?
this property that you're looking at is in Ohio, kind
Okay.
of in the middle of nowhere, actually.
Okay. Okay, got it. Someone mentioned that 11 investors is a lot. And let me answer that question. No, it is not, right? When you are first entering into the business and you need to raise, $700,000 and getting 11 people is not a lot. So if you venture out into the syndicator world, a lot of syndicators to raise this much money could have 20 or 30 people in it. So, so Jaden did a great
Mhm.
job of only having 11 people in it. So, yeah, and just wonder to Jaden, you returning their money early, right? We didn't do the calculation, but I just wonder what their cash and cash return is, right? Now that
Uh,
a majority of the money is returned.
Yeah, it is.
So,
It is going to be much higher in the
yep,
5-year pro forma view than they originally looked at.
yep.
This deal will push them pretty close to 20% as it sits right now.
Yeah, yeah, which is amazing. Amazing. Okay. Someone's asking, so you're for this deal, your investors were friends and family?
Correct. Yeah, I haven't in everything I've done thus far, which I think we might talk about some of the other properties here. I've only been talking to family and friends. And of course, with
Yep,
my brother teaming up with me, he's got a network of friends in addition to family with me.
yep,
But yeah, I've always intended to, start there and see what I could do to help some folks in that network achieve some of their goals.
yep,
Obviously, as we go forward, if I ratchet up to another tier higher, I can see within a few years I may have to go figure out the next part of this journey
yep,
where I have to reach beyond that, and
yep,
and there is a whole different sphere as well.
exactly. Jaden, what was the year of this purchase?
Let's see. This one was in late 2022. Late
Okay, late
2020.
2022. So let's call it 2023, right? So, ladies and gentlemen, this was done in 3 years. Okay. So when I mentioned earlier about something I don't like about commercials, people think it's a great, get rich quick. It's not. Took Jaden hard work. Jaden, I think we probably lost the number of phone calls you and I had in these 3 years, right? To kind of go over these things. But it's a lot of work to get here. But look what you've done. You've created almost $1 million in equity here, and you no longer have to work a full-time job. Someone's asking real quick, what's your background before you started multifamily, Jaden?
Um, well, my career prior to multifamily was in mostly a consulting context
Hmm.
and just working in sort of business and strategy and transformation of very large corporations. And so I did that type of work and enjoyed it quite a bit. And I thought of commercial real estate as a way to have something that I could get rolling, maybe incrementally on the side, in that context. And, I was looking more toward, how do I generate passive income and generational wealth? And found Peter's material and really thought that that would be a great way to do it. And of course, like maybe many of you, I'm sure, share a similar experience. I had let that thought sort of simmer for at least a year before I then realized, okay, I'm ready to go do this. And in my instance, right when I was ready to go do this is when COVID started to hit.
Yeah.
And so then
Yeah.
I delayed even more because of the COVID thing, because my understanding of what I would be doing was getting out and networking and meeting a bunch of folks, getting pocket
Hmm.
listings from a bunch of brokers and just kind of leveraging a network development process to get into this and make it grow. And I thought COVID was going to shut me down. So I kind of stalled for a while. But then, at some point, I no longer could afford to wait any longer and wanted to get going. And so Peter and I got going. But even then, as Peter mentioned, there's some time required for you to learn this process and to be articulate, in both finding and earning the trust of a seller to do business with you, but also to have a solid evaluation of a deal, and then to be able to talk about a deal and present it to
Yeah.
potential investors, even if they're your close family friends. Maybe they've seen your work in the past, and they're already impressed with you and your skill set and whatnot. You still have to have
Yeah.
pretty solid understanding to
Yeah.
bring to that.
Yeah, yes, and you want to because it's your family, right? And you want to really help your family out and not lose money. So you really have to learn this business.
Mhm.
Okay, let's go to the second property, Jaden. The second one's just as interesting. So here's Jaden's 68 unit. So the purchase price is 4.125. Received $100,000 in credits. These are repair credits. Uh, he raised $1.1 million dollars and you contributed 220, right? And then you assumed a loan at 3% interest rate. Is that right?
That's right. Well, it's in the mid threes, actually, a little above three.
Okay.
And in the marketplace, that was extraordinary. And so we definitely favored the idea of assuming the loan that was on the books. There's some strings that come attached with that approach, but when the market's not looking good from a rates perspective, the assumable loan is certainly an advantage.
Yeah, yeah. Hey, on the sidebar, someone's asking, I think we should answer this question. Someone's asking, when do you pay your investors? Is this on a monthly basis, quarterly, or year or 5-year period?
Well, you can set up whatever structure you want with your investors. I tend to favor a quarterly process
Yep,
because I choose to structure deals where the investor gets the benefit of a preferred return, which is sort of like the concept of a dividend, if you're thinking of a stock type of situation. But they get like a preferred return, and you can calculate that on any frequency you might choose to set up.
yeah,
But quarterly is effective because I like to keep the investors, informed of what's going on with the property and the asset that they've put their money into. And quarterly is, the least frequent that
yeah.
I think they want to hear about that. So that's what we've set up.
Okay, great. And someone's asking about the $100,000 in repair credits. That's a lot of money. So, Jaden, how did you negotiate that with the seller? And then so that $100,000 comes straight off the down payment, right, as a credit.
It does, yeah. It reduces the money you need to bring to the closing table.
Yep.
And
Yep.
the way that works for me, depending on what type of lender that you work with, there's different requirements that each lender may have. So some of the lenders, including the one in this instance, they launch their own inspection of a property. And there's like a charge for them to send an inspector out and look at the property. What I do is I don't, even if they're doing that, I don't wait around for that. I'll go and do my own private inspection. I'll hire somebody to go out and look at this thing very early in the process.
Yep.
And they'll give me a very detailed report that's kind of tailored to how I want to understand the detail of the property. And then I will be able to use that to get a good estimate of all of the repairs that would be needed across the
Hmm.
property. And then when I have a really good report with a really good estimate of repairs, it's really easy at that point to negotiate with the seller about what we're seeing there.
Yep. Exactly. Yeah, I recall sitting with you on the phone, going through that. And all right, and we have this other deal. Oh wait, before we go there, Jaden, how did you force appreciate from 4.125 to $5.1 million? What was the process?
Well, in this instance, we invested in renovating several of the units on the property, upgrading some of the facets of the exterior of the property so that we could fill up the units, at the appropriate rent rate. So it wasn't that I was exactly raising rents like across the board. It was more that not all of the units were positioned to get the appropriate rent. And so
Mm,
I kind of turned that around for the property.
yeah, that's great. Okay, let's get to this last one here. This is just as interesting. This is 83 units when you brought it to us, and it had 8 units that were unfinished. So now we have a total of 91. So you bought it for 5.975 million. You raised 2 million, but you only contributed 120. You contributed 6% of the $2 million, and you received a huge credit at closing, $430,000. And you completed 8 more units, now a total of 91. And it's not quite stabilized yet, but when it's stabilized, it'll be worth $8.5 million. Is that right?
That is right. Yeah, there's
Yeah.
one additional nuance. We did put an advance into this business as well because part of our strategy here was to significantly renovate. This was an older
Mm,
build. It needed like a complete overhaul on some aluminum wiring on this property and a bunch of renovation work in addition to 8 units that were down to the studs that we brought online.
great, great, great. Okay. All right, ladies and gentlemen, those are Jaden's 3 deals. He has more in the hopper, but this is what we have. So, Jaden, most people spend years trying to get their first deal. In 3 years, you did a 48, a 68, and now a 91. What role did having the right mentorship with our company play in getting you to move so fast?
Well, it is the fundamental. It's like the foundation
Mm,
of getting to a place like this. You can't really get off the starting blocks effectively without the appropriate tools, the appropriate knowledge, and really, a partner alongside who can help you when a certain, unforeseen issue that you can't really train your way around comes up. And so I needed all of those components. I used all of those in these deals. The first deal is the one that really, you kind of cut your teeth and learn the ropes on. But until you've done two or three, you might not encounter some of the variables that tend to hit. And so I've appreciated the partnership along the way, and I would say it's essential.
great, great. Okay. Um, Jaden, I think a lot of people want to know this answer. So take us back to the 48 unit, right? Let me go back to that, right? This is your first deal you raised capital for. Take us back to your first conversation with your very first investor, right? How did that conversation go? I think people here want to hear how that went.
Yes, and you know, it's hard to remember precisely the first investor because what I ended up doing was talking to three or four, within the same week.
Hmm.
But I remember early in that process of getting people connected, um, my first thought was, okay, am I talking in a way that is going to build confidence with people? So I kind of in a way, stalled going to the first conversation to make sure that I felt like I had a talk track, so to speak, that was intelligent, and demonstrated an understanding of what commercial real estate was about and particular deals. Of course, I started my first conversation with potential investors wasn't with a specific deal.
Mm,
It was with a more generalized illustrative.
yeah,
And the way I went about getting ready for that first conversation included, talking to people like my wife and others that were just very close, that were just kind of testing out, hey, does this even seem like it makes
yeah,
sense?
yeah,
What's not even in here?
yeah,
And so, because I was able to do that, then that first conversation, um, the way you will feel, the way I felt is, hey, I've only got, in my line of sight, I have, 2 dozen people that I can think of in my first wave of thinking that might, be interested in something like this and be in a position to, benefit from this.
yeah,
And so I felt like I couldn't afford to not do well in each conversation. And so
yeah,
I went in with that kind of preparation. And, the way the conversation went was I was able to lay out a quick, brief education, but I wanted to do that in a way that offered people an opportunity to talk, ask questions, and whatever. So it became this conversational thing, and I think that was the best approach in hindsight because
yeah,
people were able to give me a sense of what they were really looking for, why they would or might not want to get involved in things like this. And it helped me, every conversation made me smarter and more able to talk to the next round. But to give you an
yeah.
idea, I had ultimately 29 folks that I talked to on this first one.
Hmm.
And out of that, 5 of them said, I'm really not going to be interested in something like this at all.
Mm,
Right? 5.
yep,
But as you can see, 11 invested, and the others said definitely
yep,
interested. Just this might
yep,
not be the right timing to go at this time.
yep. And Jaden and I recall us giving you the spreadsheets to calculate the returns. You took our PowerPoints and made beautiful presentations for the investors. So you were totally prepared to do this presentation, and your presentation was beautiful. All the colors, all the numbers, and everything from the top to bottom just made sense, right? So
Yeah,
you did
and I
great.
did go in with the idea of educating folks initially because I figured most of the people I'm talking to, my family and friends, don't get this. What I ran into was a surprise because along the way, a few folks had already kind of touched into this in some way.
Hmm,
And so I found that there's actually 2 different kinds of conversations I ended up having. One was more educational. Here's what commercial real estate is, here's how it, can produce wealth and so on. But another one that was more right to the point. What are the
hmm,
numbers, what are the specific features of a deal? What are the numbers associated to it, et
yep,
cetera, et cetera. And so I have like a shorter version and a more full length educational version.
yep, yeah, yeah, and they were impressive. Yep. So you took our material and took it to the next level. All right, here's the last question. I'm gonna start the screen share. So someone's watching tonight, Jaden, wants to raise private money, but they feel they have no experience. What would you tell them tonight?
Well, then you're probably in the right place. I didn't have experience. I spent quite a while, listening to different sources of input on how things work, but then got involved with Peter's group, knowing that I needed a mentor and I needed deeper training. I needed some sort of a tool set to work with. And I'm the kind of person that, uh, I want to understand something to the point where I could do this without the help. But I definitely need the inputs to accelerate that process and make sure I'm doing it right. So, like Peter said, I've taken things and kind of made them my own, but couldn't have done that without the foundation.
Great. Yeah, foundation is key. Foundation is key. All right. So what I want to do next here is I want to run a poll for everyone here. All right. And let me grab it here. All right. And all right, I'm going to launch this poll. And here's the poll, right? Who wants to be like Jaden, right? I'm looking for a few people to do deals with, right? Let me repeat that. So I am looking for a few people to do deals with, just like Jaden. So if you'd like to learn more and what that will look like, go ahead and click yes, or you can click yes, but I have some questions. All right. So if you want to be like Jaden and just learn more and explore the process of one-on-one mentoring, how we select markets, how we train you all for capital raising and due diligence, selecting the right loan. And as I mentioned before, property management is so key, right? Once Jaden closes deals, it became all about property management and asset management. That's number one right now, and he's done a phenomenal job of that as well. All right, so if you want to learn more, go ahead and click yes. All right, okay. So I'm going to end this poll here. Thank you for participating on that. Okay. And I want to have a second poll, right? And that second poll is for someone who wants to speak with some of my staff tonight. So we have people in the background right now in the backstage ready and willing to speak with you to answer your questions, right? And as I mentioned before, I am looking for people to do deals with, right? So the way our program is set up is that let me show you how our program is set up. Let me take you to the screen right here. Let me show that one there. All right. And does that show? Yeah, there we go. All right. So that's showing the wrong one. Let me get the right one up here. All right. Let me stop to share. All right. And I'm going to share this one right here. All right. It's this one right there. Let me share that real quick there. Okay. And what I want to share with you is this right here. All right. This is it right here, right? I'm looking for a few people to do deals with. And if you're interested tonight in speaking with someone, because one good deal could change everything, ladies and gentlemen. So the way this is set up is one-on-one mentoring. We teach you how to structure deals. Jaden went from a beginner knowing how to expertly structure deals with his investors, and probably the most important part is our interests are mutually aligned, right? So when you succeed, we succeed. When you make money, we make money. So we are both incentivized to do well together. Okay. All right. So if you're interested in learning more, go ahead and do that. Click on that. I'm going to end the poll here, and I'm going to share another. I'm going to share another screen with you here, and basically show you how the mentoring would work here. All right. Let me share this screen right here. All right, you can see the screen right there. All right, and if you go to commercialpropertyadvisors.com/coaching, you will run right into this page right here. It's a picture of me. All right, and all right, so select your state. What do you want real estate to do for you? How much do you have available to invest? Your first name, your last name, your email address, your phone number, then click yes to give us permission to contact you. That's it, right? So learn more about what we do with our company. All right. Okay. Now, what I want to do here is give you one more opportunity. I'm looking at the chat right here. I want to give you one more opportunity to do this. Uh, okay, let me relaunch this poll here. I'm going to relaunch this. All right. Some of you may have missed that. So if you're interested in speaking to one of my folks tonight, right, I have people standing by, awesome people waiting to talk with you. So if you're interested, if you missed the last uh, poll, right, just click here and we'd be happy to have someone contact you and speak with you tonight. All right. And if not tonight, we can do it later. Okay. All right. We're giving you an opportunity to do deals with me and my company. And as I mentioned before, one good deal can change everything. I've seen it time and time again. All right. Okay. All right. So let me stop the share here. Let me get back to Jaden. All right, Jaden, I just want to say thank you so much for spending this time with us. Your story is always inspirational and your wisdom is phenomenal. And as I mentioned before you got on, I mentioned everybody that you have 9 kids and 9 grandkids. So you probably have a pretty busy life there.
Yes, yes, Peter. Grandkids are very busy at this stage of my life, but uh, but we love it. So we've enjoyed having a bunch of folks at every holiday, and look forward to continuing to grow the family here.
Yeah, that's awesome. All right, everyone out there, give Jaden a big thank you and give him a hand. All right, give him a little bit of love here. So we just want to show him our appreciation. All right, so put it in the chat. Just say thanks, Jaden. Everyone appreciates you. You got all the hearts there. You got the high fives there, the happy faces, Jaden. So everyone appreciates everything that you've done. All right, everyone. Okay, so what I want to go to next, I'm going to segue into a video that I would like everyone to watch. It's a great video. The Jaden stories there, other stories are there. You got to watch them because it's a phenomenal video of what one deal can do to your life. All right, so let's go there next. Take it away, Michael.